The market thinks it has HIMS and HERS all figured out, a simple reseller of generic drugs. But what if the market is just wrong? What if there's a sophisticated healthcare platform hiding in plain sight, right on the verge of a major transformation? Today, we're going to dig into the evidence and uncover the real story behind HIMS. So, the common bear case, the story you hear everywhere, is pretty straightforward. People have labeled HIMS as just a direct-to-consumer marketing machine, one that burns a ton of cash to resell commoditized generic drugs. The assumption is that it's a business with no real defensible moat.
But here's the thing. That view is totally backward-looking. It completely fails to account for a strategic pivot that's fundamentally changing their entire business model. So the real question for investors today is this. What if the market is missing the inflection point?
Okay, so here's our game plan. We're going to deconstruct this misperception piece by piece. We'll look at their platform strategy, then the absolute key differentiator in personalization, after that the financial firepower they've built up, their global ambitions, and then we'll deliver a clear verdict on why this company is at such a crucial turning point. All right, first things first, let's tackle that bear case head on. The myth of HIMS as just another low-moat reseller. Look, this perception isn't totally baseless. It's just incomplete. HIMS themselves tell you they use omni-channel marketing. You see them all over social media, TV, search. This high visibility is what feeds that narrative that their success is just a function of ad spend, not some durable competitive advantage. But that's only looking at the very surface.
That marketing, though, it's really just the tip of the iceberg. To truly get what HIMS is doing, you have to look deeper at the platform they're building, and that's where their real story begins.
And hey, don't just take my word for it. This isn't some marketing fluff. This is a direct quote from their 10K filing. It's a crystal clear signal to investors that HIMS is playing a totally different game. They're not just selling products. They are building a scalable platform that can add new, higher margin services over time. And this brings us to the most critical piece of this entire thesis, the one capability that just completely dismantles the generic reseller story: personalization through compounding. This is the game changer. So, what is Section 503A compounding? Well, it's an FDA-regulated process that lets them create customized medications for a specific patient's prescription. Basically, think of it as moving from off-the-rack, one-size-fits-all medicine to something totally bespoke. And this is the whole strategic shift in a nutshell. By using compounding, HIMS is no longer just a middleman for Big Pharma's generics. No, they are creating their own unique formulations. These are personalized, proprietary treatments, and that creates a much, much stickier customer relationship and a very significant competitive moat.
Okay. Obviously, a strategic transformation of this size requires a lot of capital. So let's follow the money and look at the financial war chest HIMS has put together to fund this exact pivot.
In early 2025, HIMS locked down a $175 million credit facility. Now, this isn't just about keeping the lights on. This is a war chest. It's capital that will let them accelerate platform development, push into new markets, and maybe even make some strategic acquisitions. Next up, they bought back $83 million of their own stock in fiscal 24. This is one of the clearest signals management can possibly send. They believe their shares are fundamentally undervalued, and they're backing up that belief with the company's own cash. And then there's this. In 2024, HIMS booked a $54 million tax benefit. Now, I know this sounds a bit technical, but it is a massive vote of confidence from management. In simple terms, they're so sure about their future profitability that they're making a major accounting move based on it. It's a huge signal that the business has really turned a corner. This strong financial position isn't just for defending their home turf. It's for going on offense. And that brings us to the next big growth vector, the international horizon. Again, we're not just looking at a pretty marketing slide here. We are digging into the fine print of their 2025 credit agreement. This dry, legal language explicitly defines foreign subsidiary borrowers to include entities in Canada, the UK, and the EU. Let's be absolutely clear about what this means. This is not some aspirational goal they mentioned offhand on an earnings call. This is the hard wiring. The legal and financial rails for a multinational healthcare platform are being laid right now, today, embedded directly into their core financing documents. So let's pull all of this together and deliver the verdict. The evidence, when you look at it, clearly points to a company that is just not what the market thinks it is anymore. This is a classic inflection point. The contrast here is just stark. The old view sees a commodity reseller, totally dependent on marketing spend. The new reality, which is supported by all the evidence we just went through, is a personalized healthcare platform with scalable infrastructure, proprietary treatments, and an increasingly sticky customer base. So the final verdict is this: HIMS and Hers has successfully executed a fundamental shift in its business model. The company the market is valuing today is not the company that's going to be reporting results over the next several years.
Now, of course, this transformation isn't without challenges. HIMS absolutely has to navigate a complex regulatory landscape. They have to manage relationships with their medical partners, and they have to stay ahead of the curve on data privacy. But these are known variables, right? And they don't change the fundamental story. This is a company in the middle of a major transformation, and the market just hasn't caught on yet.
Which leaves us with the final and most crucial question. The market is pricing a simple direct-to-consumer marketer. But the filings, the strategy, the financials, they all describe an integrated healthcare platform. The disconnect is obvious. So the only question that really remains is, when will the valuation finally catch up to the reality?